Hey guys, this is a market update. The crypto regime has changed and I've got some data here to show this. We're now 1 year away from the halving and this is a really pivotal time, or at least it has been in every other cycle. And so I want to go through some of the data points of that. You can see we're still meeting resistance at this 30,000 level. I really want to say that this really key level here is pretty much the difference between, being preparing for a bull market and then just really just going through into a new complete bull market. We are in that different stage right now. We're actually gearing up for the bull. So I've got this right here, which is previous cycles of all the halvings, which we're going to look at, and why I think, we just have changed into this different regime right here, which is usually the calm before the storm, which is the halving and the new all-time high. Are we going to get that this time? Obviously, that depends on a lot of factors. But this key level here, and I'm on the week chart, which I think is more important right now, just to see where we are in terms of where we are in the actual cycle right now, both Bitcoin and economic. If we go to the week chart, you can see the actual really clean level of support and resistance right here is actually around 31.7, call it 32,000. So we're going to play around this level. But as you can see, what I've drawn here is, all of the ups and downs have essentially created just an uptrend channel. You've seen that right here with, a rejection off the channel, a retest, a rejection off the channel, and, what seems to be a bullish kind of bounce off that again. However, we can't just go up like this in a straight line. I say that, but that's exactly what happened in the last cycle, where, as you can see, we literally just went in a straight line from 10,000 up here. Now that was the biggest monetary debasement, money printing that's ever occurred in the human race, and so we're not going to get that again. But you can see just how this is a different trend now. So the price is different. This trend is completely different to the regime we've been in. Now you can see by the RSI here, in the previous bull market, it topped out at this level actually. All of this price action was very late stage bull market and it was actually noise and not signal. You can see the RSI showing us that was the top right there of the strength. And then we've had weakness the whole way down, but that has now that is now different, right? We're now going into a period of more strength for the price, upwards price movement. So I just want to lay that as a foundation for what we're going to look at with the cycle data right here. Also important as well is the drawdowns we get in these types of regimes are really big. And so we need to keep that in mind because, getting a very big drawdown, you may think, well, we're not in a bull market or the regime is different, but it actually isn't. So this key level here is 32. And for this part of the regime in the cycle, I really don't see any reason why we would break through this apart from some sort of very large narrative change, which is coming, but it's not like one day we wake up and something's totally different. We've seen that banks are collapsing, liquidity is increasing, the market pricing in a turn of what the Fed and central banks are doing. This price shows that, but this 32 level is really, really key. And maybe it takes, another 6 months to break through it. So we've had a really good uptrend. Maybe we bounce around it, break through, but this is the key level to watch right here, 32,000. So I'll show you some other data. If you are a trader though, deposit bonus on Bybit down in the description, up to $4,000, make a deposit. If you are a trader, check the details via that link. I'll show you some on-chain data in a second, which is really important. But for right now, we can see where we are in this halving cycle compared to previous halving cycles. Each halving cycle for me has 3 distinct stages, which is the run to a new all-time high after the halving. So these blue lines are halvings right here. Each time you get a massive run up into a new all-time high. And then you get a bear market. So we get these big drawdowns in red. You can see them here. So we are obviously past that red stage now, in my opinion. Why? You can see here, each time we come down to this is just a logarithmic regression right here of kind of the growth, right? With a mid, upper and lower bound. We go through the top bound in each bull market, which is obviously way overheated in terms of the price of Bitcoin. We actually just double topped there during the last bull market. Now we get the drawdown, which we've had from there down to the second regression channel. We did that 3 times, as you can see right here. And now we're kind of in that stage. So we are in the stage now where the bull market has never really occurred with these massive price movements to the new all-time high until after the halving. We've got another year, 12 months of that. So for me, still really good to accumulate here. For me, anything under this kind of mid log regression is, if you are a long-term investor, just somewhere to accumulate. But this price action has been actually better than I would have thought, right? There's been not much lingering down at this price. We really bounced off of it just like we did in this one. So we have turned in the cycle, in my opinion. I think that's what I want to get from this, is that we are in this yellow phase, which has always typically been the turn before the real bull market, which comes after the halving. Now that comes in line with what we're seeing in the macro economy as well, where, the Fed is basically going to pause raising rates, or, within 6 months, rates aren't going up, right? They're not still going up. They're going to be either paused or eventually coming down. So 6 to 12 months time, you're going to have an easier environment for the economy with, the narrative trying to spur growth again, rather than what we've had for the last, 12 months, which was that. So you've got the macroeconomic cycle and the Bitcoin cycle almost in unison right here. That makes a lot of sense as well, because, Bitcoin prices do move along with the economic cycle as well. And these all-time highs, they might have a lag of 6, 9, 12 months anyway from when they actually reach new all-time highs. So what you actually need, in my opinion, to reach that high is essentially an economic bull market as well. And that's not going to be happening this year. In fact, the exact opposite, but it may start to be happening towards the halving and after. So I think the economic cycle and the Bitcoin cycle are in unison, and potentially that's great news for 12 months plus out, and that would be the exact same as every halving. Now, looking at global liquidity as well, we look at the settings here. Blue is West dominated, so US, Europe. East dominated, mostly China. What we can see here is during the bear market, this massive drawdown, that was when liquidity was starting to come out of the system. Liquidity is liquidity within central banks, right? So essentially them pouring money into the system, trying to stimulate the economy, lower rates, more money printing, trying to stimulate demand. And you can see that they've been taking that away over the last, bear market right here. Both. Actually, China were doing okay, fell off a bit, but you can see both have started to turn right now, right? So you have the massive bull market where liquidity is increasing. That was the bull market. And then we had the draw off of the quantitative tightening, which we've had in the bear market. Things are starting to change. The central banks are in charge in the short term, but demographics, the economy, slow growth economies in the West, central banks really don't have much control over that. They can only stimulate demand, which I think is the overall long-term feature of the economy, which is stimulating asset prices through currency debasement. That's why Bitcoin is a choice for me. And so I think the turn has happened, and it's not going to all happen in one go like COVID, but it's just going to potentially eke up a little bit and be a much better environment for Bitcoin to actually flourish. There's absolutely no point whatsoever waiting for all of the economic data to show that we're in a recession to think that, when that actually turns, then the market will turn. That's absolutely not the case. This proves it. As you can see, essentially this is stocks. Now, Bitcoin isn't stocks, but there is going to be a correlation here essentially with, liquidity and stimulating the environment and going back to growth, right? So what we see here is that the average total return and the price to earnings ratios fall before earnings get to their low point. So what that essentially says is the market prices in what they expect to happen in the future. And so price to earnings ratios fall, stock prices are falling, right? So you have stock prices falling much faster than actually the price to earnings ratios fall, because price to earnings come out every quarter for these companies. Stocks can sell off much quicker than that. Total returns go down, price to earnings ratios go down, stocks go down, but they turn right here before the actual earnings per share eventually bottom out. I've seen that in many videos before. The stock market will bottom way before all of the economic data bottoms out. So we can see that here. Where are we in this stage? It's impossible to understand. We don't know how bad or the recession will be, if it happens, if it's going to be a slowdown, a weak, mild recession or not. That's all unpredictable. We don't know that. But for sure, if you're an investor, you can't just keep waiting and waiting. You have to kind of just dollar cost average through the mess of that recession when you see data getting weak. That's what it says. That's what all of the data says. You have to just dollar cost average through those times because they are the best times to pick up. You're not going to catch the bottom, but if you can catch that part of it as it's coming down, then you do typically get better prices, you know, with the fundamental assumption that you're investing in something that's growing over time. Bitcoin, I believe, is, and many other stocks and cryptos as well. This on-chain data is also showing, just like every other cycle, that we've potentially turned out of that bear market. I don't think we're in a bear market anymore. Like I said, I think we're in that accumulation phase, or, you know, that sideways crab phase where the situation has changed. So this looks like a bit of a mess, but as you can see here, for each previous cycle, you have this orange shade right here, which you can just see. That is where the supply in loss is actually bigger than the supply in profit. This happens at the low end of every bear market drawdown. Now, on the flip side, if you're a long-term investor, that's actually the best time to accumulate, you know, because that suggests that everything is very oversold and very weak, given that you believe Bitcoin continues to grow over the long term. So as you can see here, bottom of that bear market, bottom of this bear market, bottom of that bear market, and potentially bottom of the most recent bear market as well, if we consider this now has come out of that regime. The green out of that is where you get that recovery. So we have green recovery, green recovery, green recovery, and now we have a green recovery. Each time that's happened, it doesn't reverse. At least it hasn't before. Each time we get that recovery and the BTC supply and profit crosses over, which is this blue line, each time it's done that, it's just gone on to continue to grind higher into new all-time highs after the halving. And so maybe that doesn't happen again, but we are following the exact cycle once more from this data. Another way of looking at this is how many people are capitulating and selling out. It seems like that's all finished. Again, previous bear markets, you have the red zone here where capitulation occurs, and then you have the recovery. So red into green, and then this bear market, red into green. So it's very difficult that none of the on-chain stuff, none of the macro stuff is saying that we're continuing into a bottomless pit. All of it is saying the recovery is happening. You know, the liquidity is increasing from central banks. China is pumping money into their economy. The US is through the back door, through the BTFP, right? So they don't want to admit that, but that is what they're doing because of all the bank blowups. And the Bitcoin cycle is showing that as well. On-chain data is showing that recovery is happening. But the important thing to note is how volatile this can be. And so while making price predictions is absolutely futile, you can see here in every previous cycle, the drawdowns during the bull part of the cycle and the recovery are immense. So you can regularly get 30+% drawdowns, 30 or 40% drawdowns in the price, which is, you know, insane, right? So you think we're in a bull market and then the price is down 50% and you think, what's going on here? It's absolutely normal for Bitcoin in previous bull cycles. You can see these drawdowns here. This drawdown in the previous bull market, this 2019 COVID crashes, really awful data. So let's just ignore that because obviously that's a black swan. But still there, 30 or 40% drawdowns in each of these cycles is absolutely normal. And so important to be aware of when thinking about prices and price predictions. 30% plus drawdown, even in a wider recovery, is still very normal. All of the economic data now is coming in weak. Yesterday, GDP missed expectations. It's 1%, which is below the general long-term growth targets of most governments, right? So you're just seeing this. And unemployment will tick up, but it's always the last thing to go before you then get that whoosh into the new bull market as governments say, hey, look, we need to actually support the economy again with some stimulus or lower rates, and pressure gets on the central banks. And so that's what Bitcoin is pricing in right now, and why I'm happy to accumulate, even if we get these drawdowns, which I hope we do. 30-40% is great. This 32 level is really key, and I don't really want to break this right now. I think you maybe get that after or towards the next halving would actually be much more suitable. You know, any breakage of this up to 40, you're starting to get very overheated for me. And, you know, maybe a 50% drawdown is very, very possible, but normal for that stage in the cycle. Anyway, if you are a trader, link in description to a deposit bonus on Bybit up to $4,000. Just check all the details down there in the description. I'm James with Money ZG. Cheers for watching, and I'll see you in the next one.